heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, the US, it weighs tougher trade curbs on chips for China. Stocks tumble.
Plus, Elon Musk moves SpaceX and X to Texas.
And will JD Vance be good for business? We'll discuss, but first let's check in on these markets because we are having the worst day for the Nasdaq and the Nasdaq 100 since October of 2023. We are pulled lower, in particular on the chip stocks, off by 3.9%. The key is trade tensions. The key is the Biden administration wanting to be limiting sales of key AI technology and chips to China. And Ed, you have got the details on the micro.
Yeah, there's two names I'm looking at in particular. They are global names, but you're absolutely right that it's the chip stocks in the US that are really weighing on markets. Tokyo Electron down 7.5% overnight in Japan, biggest drop since April of this year. ASML, the Dutch chip equipment maker, down 10.8%, on track for its biggest drop since March of 2020. The story that Bloomberg's reporting is that US officials are considering tougher curbs on the access of the technology made by those companies to China by Chinese companies. Let's get into it. Bloomberg's Ian King joins us in San Francisco. Sarah Jacob joins us out of Amsterdam. Ian, I'm going to start with you. We're talking about something called the Foreign Direct Product Rule, FDPR. Sources tell us this is something that US officials are considering using. What is it?
Yeah, I mean, it's the way to look at it is kind of the nuclear option in terms of trade action that can be taken. It's basically saying that if something has even the tiniest scintilla of US technology or US input, then the US can exert control over it. And it's born out of frustration with the impact that we've had with with what's being perceived as a sort of lagging reaction by the allies in terms of getting on board with the US and in terms of that effect undermining.
Go to one of those allies now, because ASML, Dutch company, being hit hard. Their earnings were good, Sarah, but the impact on their Chinese sales likely to be tough.
Yes, that's right. Actually, ASML reported second quarter bookings that beat estimates. And it's been talking about, how this is being driven by the artificial intelligence boom. As we know, ASML has a monopoly in making machines that, produce the most advanced semiconductors. And this is also being driven by demand for very high-powered chips that are needed for AI applications. But suddenly people looked to how much China accounted for in terms of the company's sales, and China accounted for nearly half of ASML's second quarter sales. It remains ASML's biggest market. And those also increases, these increasing exports also show that risks are ramping up and because of diplomatic tensions possibly between the US and the Dutch government to push for more export curbs.
Ian, this is a diplomatic issue, but also this is one that is going to be impacting US companies. We know Micron, for example, significant sales to China. Is this just signaling yet more is to come when it comes to a revenue hit?
It's signaling, I think, frustration with the way that these curbs have been implemented and the impact that they've had, and a concern, I think, that the Chinese companies, these upstarts that were supposed to be held back, perhaps haven't been. That's really what the tension is going on, and there's an exploration and a consideration of other measures and how we might exert increasing control. Fundamentally, we don't know what's going to happen. Obviously, this current administration is going towards the end of its term, so we'll see.
And therein lies the point that's made in the Bloomberg reporting. This moment in time, we're headed for a US presidential election. Earlier today, Bloomberg spoke to Virginia Governor Glenn Youngkin. Just listen to this real quick.
China is not just a rival. They're trying to dominate the world, and they're trying to do it at the expense of the United States. We need to not only protect ourselves against China, but we need to fight back. And so the tariffs that President Trump imposed on China when he struck the first Chinese deal were critical in order to rebalance an unbalanced situation with China.
The point raised by the governor, Sarah, is that this approach by the Biden administration and officials might change depending on the outcome of the election later this year. In the context of China, what is it that the United States wants of its allies, where you are in Amsterdam, namely the Dutch?
Well, they basically, from what we're hearing, it's about extending those curbs and potentially also looking at how they can limit the companies in particularly ASML's ability to service and repair restricted gear that's already in China. As you know, also in the Netherlands, we've had a new government and new cabinets in place. We haven't really heard from the new cabinet what their policy is going to be on this, but we'll have to wait and watch.
Ian, King,
Bloomberg.
I want to thank you.
Sorry,
Sarah Jacob, of course, in the Netherlands, coming on all things ASML and chip equipment companies. I mean, Ed, let's just dwell on this for a moment, because I love the way that you bring in what the Governor Youngkin was saying about, look, this is not something that can just be thought of as talking tough with Biden. We are knowing that the Trump administration likely to be pushing back on China hard. And indeed, there was this really important story out today on Business Week talking about how Taiwan is currently being something that needs to be considered more. That actually had a big impact on certain US stocks today.
Yeah, I mean, the point made by former President Donald Trump in an interview with Business Week is that if he was come to power, he would look at Taiwan paying for protection. And a lot of that has been extrapolated out. We're showing Intel and Global Foundries shares there being the exceptions to today's trading and moving to the upside. And there are some notes out there that are saying this is TOA, the only alternative, that if President Trump came to power in November and took office next year, then an action to be taken on TSMC. Well, in the context of global manufacturing of semiconductors, Intel would be the only alternative for investors to back that kind of move. I don't know what you make of that sort of direct correlation, but that seems to be what the market's suggesting with its trading this morning.
And look, the direct correlation is so clear. Let's just bring up the stock charts. Let's just show how much Global Foundries is outperforming the rest of the market today. Look, every single chip company in the stocks is down, apart from when you're looking at Global Foundries up more than 9%. It was eclipsing 10% earlier in the trade. Intel up 2.8%. But it is interesting to think about how much this onshoring narrative has been one that the Biden administration has also been pushing, yet more money being handed out at the moment when it comes to the CHIPS Act.
We have seen the Bloomberg reporting. We've been through the markets. Let's get an investor's reaction. For more, we're joined by Kim Forrest, Boca Capital Partners founder and CIO. I think let's start with that most recent point that, I think the market sees a more likely outcome that Trump becomes president. And based on the Business Week interview, he may look at Taiwan. TSMC may be impacted, and that may benefit the foundry or fab business of Intel. How would you assess that and play that, Kim?
Well, I think, with the Biden administration getting tougher, I'm thinking this is a toss-up. This is an issue for the next 4 years, regardless of who comes into power. And I think that onshoring, not just in the US, but also over in other parts of the world, like the EU, I think that is more of a longer-term goal, because we all kind of see the error in our ways of having one geography. And even let's forget about that it is in a very seismically active area, and they get a lot of disruption because of earthquakes, and it's near a rising China. It's 68 miles from mainland China, so there's threats there. But just the basics of having one place where all of the chips that are the highest technology are made is really kind of ridiculous. I just, as a risk remediator in my business, I don't see how we got here, but here we are.
Okay, so has that been changing the way in which you think people should be investing in these names? TSMC has been making the most of the CHIPS Act here in the United States, has been trying to expand. Admittedly, there's been hiccups and expansion struggles when you think of Arizona. But these are companies that are looking to onshore to be closer to where their client base is. How much should it be knocking the capitalization? I'm looking at TSMC, the depository receipts, having their worst day since October 2022 today, Kim.
Sure. Well, I think they're trying to move in that direction, but it's slow, as you noted. And it's just the nature of the beast. These are not factories that can be thrown up overnight. It takes a very long time for even the physical building to go in, let alone the equipment. So, and then that ties into ASML, that they too are playing into this. You can only make this exotic equipment as fast as you can make it. And that's part of the dilemma here, is how quickly can people move? And the answer is not very fast. And I think that's why stocks are trading lower, because they see if the U.S. puts up gates to sell this equipment, it's really going to affect these companies, and the turnaround is not quick.
Kim, on that last observation, I'm looking at the NASDAQ 100. The biggest percentage decliners, of course, are all chip makers. If we close down 2.3%, that's the biggest drop for the NASDAQ 100 since October of last year. Things have changed quite quickly. This was a market until last night was looking at the election factor and was trading in a positive manner, and now things have changed. Why? Why this sudden anxiety, do you think?
Well, I think the geopolitical focus on semiconductors. At the very smallest equation, we've all been told money makes the world go round. Well, semiconductors makes the money go round. And, they're at the underpinning of every business now. Energy is important, but semiconductors are now equally important. And the more exotic the chips are for AI, which everyone seems to believe that is the thing that will bring productivity and is the next big thing, it is a major focus. And do we let one area of the world be the only maker of it? I'd say no, we cannot. And this is all countries, not just the U.S.
Kim Forrest, The Global Perspective, Boca Capital Partners founder and CIO. Brilliant to have you on the show. Thank you. Coming up, look, Elon Musk saying that X and SpaceX are going to change their headquarters. They're going to Texas. We'll have all the details next. This is Bloomberg Technology.
It's time for Talking Tech, and first up, Global Wafers wins $400 million from the US. The Taiwan silicon wafer producer was awarded funds through the CHIPS and Science Act as the company readies for projects in Texas and Missouri. Global Wafers says it plans to invest a total of $4 billion into the initiative, creating 2,500 jobs. Plus, Revolut is in talks with Tiger Global to lead an upcoming share sale. Revolut CEO Francesca Calisi spoke earlier on Bloomberg about its prospects.
This is about confidence, since every time that new investor comes aboard is a big sign, and especially when there is also impact on valuation, right? So this is a good measure, moment of truth for all of us.
Tiger's involvement would be leading a secondary offering. It can now value Revolut at more than $40 billion. And shares of GitLab are rising today. The Alphabet-backed software maker is said to be exploring a sale after attracting interest from potential bidders. That's according to a report from Reuters. The San Francisco-based company is working with investment bankers and has attracted peers like Datadog. Karen.
Let's just talk about Elon Musk and what he's just been saying on X when it comes to a couple of his companies, Ed. The headquarters of X and SpaceX will both relocate to Texas, with the billionaire citing frustration over laws in California, where the companies are currently based. Let's break all of this down. Bloomberg's Kurt Wagner's with us, Max Chafkin. Kurt, I start with you as someone who's the lead byline on this story. The frustration being a new law recently passed in California to do with transgender children in public schools. Politics affecting Elon Musk's view on where to base his companies, it seems.
Yeah, absolutely. And I think this is, a progression that we've seen for the last couple of years, but especially just the last couple of weeks, right? I mean, he has now come out publicly in support of former President Donald Trump in the upcoming election. He's donating to his campaign. We've seen Elon Musk complain about the laws in California, the liberals in California for years. And so, while it feels like a bit of a reactive decision, right, to see this new law and suddenly say we're going to move these companies out of the state, I think this has been a long time coming, and anyone who's followed Elon closely could see that this was building and building.
Max, I think it's really important that the four of us talk about the technology and company impact this is going to have. SpaceX is critically important as a leader in commercial space. But you've been focused on Elon's politics as well in the Elon in pod. I mean, you will have seen the back and forth between Governor Newsom, who shared an image of a Trump Truth Social post, the timing of which we can debate. It must have the photo taken during Trump's former period in the White House. But the point being that Musk here has changed his politics and it has impact to his companies, has impact at a macro level.
Yeah, I mean, Elon Musk identifying himself as a supporter of the former president and also likely a major donor, maybe the biggest donor. He's definitely in the middle of this debate, and we're seeing Gavin Newsom effectively as a surrogate for the Biden administration, doing what you would expect from a surrogate, which is to sort of point out the obvious apparent hypocrisy of being at one point opposed to former president and now being an enthusiastic supporter. And as Kurt said, long time coming. Elon Musk himself already lives in Texas, so it's not hugely surprising that he's doing this. It does have the feel of a political stunt more than anything.
Not hugely surprising, but important for California and its technology industry, right? Bear with me, but on SpaceX, they have around 13,000 employees. Many of them are in Hawthorne. Falcon 9 is built in Hawthorne. They stick it on truck and trailer and ship it to Florida. And then there's X. I think that company was creeping out of the building on Market Street anyway.
Yeah.
But we're talking about the footprint of two companies leaving the state.
Yeah, I mean, I don't think there's any way to sugarcoat this in terms of what it looks like for California, right? It certainly looks bad. It looks like you're taking the best, the brightest, the smartest technologists in the industry and moving them somewhere else. And so there is definitely an optical issue here. Now, the logistics of this are very important because while Elon has also moved Tesla to Texas several years ago, there's still a huge office here in Palo Alto, as you know, for Tesla. And so the question is, are these employees actually going to be leaving California? Are the jobs literally leaving California? Or is this more of a logistics thing of rebranding the company there?
Now, Max, ultimately, this is quite a personal issue for Elon Musk, this current new law coming in California. One of his eldest children, as was cited in the story, went to court the day after they turned 18 in 2022 and changed their name, citing gender identity and the fact that they no longer live or wish to be related to my biological father in any way, shape or form. This is personal, but it also makes the consumer feel personally about some of the moves that Elon Musk is taking. And ultimately, from your Elon Inc. podcasting viewpoint, how much is going to impact the businesses that Elon's getting ever more political here?
Well, I don't think this particular move is going to have a huge impact either on the way consumers feel about, Elon Musk or about, even the way that his employees feel. I mean, as Kurt says, it's not clear many are even going to have to move. It is the latest sign in a series of signs of Elon Musk becoming this very polarizing figure. And that is a challenge especially for Tesla, right? Which has this enormous base of customers, many of whom live in suburbs, many of whom are not hardcore Donald Trump supporters. So but he's sort of made his bet on this over the last few years. So in a way, I don't think it's going to have a huge impact. It's more just a symptom of this ongoing, the ongoing politics of being Elon Musk.
Bloomberg's Kurt Wagner here in SF, Max Chafkin. Thank you both. All right, coming up on Bloomberg Technology, we're joined by TechWolf co-founder and COO Mikhail Warnu to discuss how the company is utilizing AI technology in HR and recruiting, and more on their recent $42 million Series B. This is Bloomberg Technology.
Today, it's our AI in Action segment, and we're joined by TechWolf. It's a company focusing on utilizing artificial intelligence in the world of recruiting, actually, and retention, as a tool to manage talent. The company also recently closing a $42 million Series B. We want to bring in Michael Warnu, who's TechWolf co-founder and COO. Michael, how is the more targeted large language models that you're developing helping companies identify the talent they already have?
Yeah. So we use artificial intelligence to help employees flourish at work. but also employers to help employers make better, smarter workforce decisions, who to train, who to hire, who to develop. So instead of saying we need to hire 1,000 AI engineers, our AI can come in and say, no, actually, you only need to hire 500, and the other 500 can be redeployed, reskilled, trained inside the company. And essentially, that can save the business millions in direct recruitment costs, millions in severance fees, and millions in attrition. And so today, we have about 2 million skill profiles for employees. We work together with the most innovative HR leaders on the planet, I'd say, HSBC, GFK, BP, Ericsson, United Airlines, MetLife. And we're really making all the difference here with AI.
Michael, where in the hiring process does this come in, right? There's already sort of algorithmic filtering of CVs, and then you basically, in the first line, have HR people going through piles before the hiring manager gets it. Where do you come in?
Yeah, and it's good to take a step back. Skill management has been around since the 80s. Trying to understand the skills of people inside the company has been around for quite a long time. So we come in, big company, 50,000 to 100,000 employees. And the first thing we do is essentially create data, skill data for everybody. And that's the first. We're the first company that can reliably do this. And then the second step is actually using that data to make better decisions. So with our data, we can typically see that there's a 25% skills mismatch. So 25% of employees have not the skills to perform in a job. We can demonstrate that 75% of vacancies can be filled with internal talent. So it's a completely new way of looking at the workforce, more than specifically focusing on recruitment. It's a data platform for HR.
Michael, what's interesting is you say, what's talent identification goes back to the 80s. There are some big HR players out there, and funnily enough, some of them are actually backing you. You've got some strategic investment, Felix Capital leading your Series B, but SAP, ServiceNow, Workday. What's your outlook? Do you remain independent?
Of course. And when we thought about the round composition, we took a step back and we asked ourselves the question, what is needed to build a European generational AI company? And then from that capability lens, like 3 big investor groups came up. The HR and HR tech investors, as you just mentioned, it's the first time Workday, SAP, and ServiceNow are investing together. But also Felix, like essentially giving us the opportunity to learn from people who have scaled really big businesses before. And then lastly, AI, and essentially ensuring that we have the best and brightest AI brains on our cap table. So we have people from DeepMind joining, the AI leaders from Hugging Face and Meta, to ensure that we can keep our AI leads in this space.
Michael Warno, co-founder of TechWolf, thank you so much for your time. All right, coming up on the show, we're going to be joined by Hani Farid to discuss the launch of Get Real Labs, a startup utilizing technology to combat deepfakes and manipulated media, an especially critical topic in this election year. Stay with us. We'll be right back. This is Bloomberg Technology.
On startups and technology, we are certainly among the best experts in the world. We think Donald Trump is a better choice than Joe Biden on these issues.
That was Ben Horowitz, co-founder of the VC firm Andreessen Horowitz, explaining why he and co-founder Mark Andreessen are now backing Donald Trump. The famous VC duo is planning to donate a significant amount to his campaign, according to a Bloomberg source, though the donations will be personal contributions from the two men, not from the firm itself. I want to bring in Bloomberg's Lizette Chapman. And Lizette, you've written brilliantly in the last 48 hours about essentially Silicon Valley's reaction to the events of the past week, the RNC and JD Vance being Trump's VP pick. Just summarize the reporting for us, please.
Right. So there has been a huge outpouring of support for Trump and his VP nominee Vance. Not only has Elon Musk and Mark Andreessen and Ben Horowitz, as well as David Sachs, Doug Leone and Sean McGuire from Sequoia Capital, all of these tech and venture capital, big name, very prominent people here in Silicon Valley have all lined up to support Trump in recent weeks, with gaining momentum as more and more seem to like what he has to say about tech policy specifically.
They realize in some ways this might be controversial for those that are or in their family. That's certainly what Ben Horowitz spoke to, that people within their company, Lizette, to take such an openly political stance. But what is in it for small tech, as they call it? Because from what we understand, well, the VP pick doesn't like big tech much.
Right, that's right. So on small tech, which is what Mark Andreessen and Ben Horowitz, they call it their little tech agenda, specifically for startups. There's a couple of areas that they're really hoping to bend the ears of Trump and Vance on, including potentially open sourcing AI, loosening crypto regulation, and possibly taking another look at the FTC and the antitrust regulations that we've seen come down. And one of the reasons for that is because although it does target big tech companies, by preventing them from acquiring smaller startups, it closes down that path as an exit for them, and they can only IPO, which hasn't been as strong in recent years.
Lizette, we made the point on the show, and we can illustrate it again with a visual representation of who's come out in support of Trump. But it is many or some of Silicon Valley. It's not all of Silicon Valley. So what have you learned about any remaining support in that industry for the Democratic Party, or even those that have changed position along the way?
That's an excellent point, Ed. And again, the reason why this is so significant on some ways is because it's been a major departure for many people that have long time voted Democrat. But to your point, it's certainly not all of Silicon Valley. These are some very prominent names that are supporting him, but there's still a large contingent of Democratic voters backing Biden. Certainly, Steve Ballmer, Marissa Mayer, quite a few others have traditionally supported Democrats. And so, the conversation is still very mixed. It's certainly not all tech, and it's certainly not all of Silicon Valley.
More broadly, Lizette, is this likely to get louder as we go towards November? Is it just that this is a moment in time where people lay their cards out and get on board the rest of those that they work with, and indeed the portfolio companies understanding their stand?
I think it will get increasingly louder, more raucous, and potentially more divisive if you look at some of the beefs happening right now, playing out on the X platform, because campaigns and gain steam as we get closer to the election date. So I don't anticipate this ratcheting down anytime soon. Doesn't mean it won't stay civil. But we will look ahead to see how things will progress.
Here's hoping on that civility. Lizette Chapman, brilliant to have you on. Thank you very much indeed. We were just talking about some of the beef going on social media, but let's just talk about how artificial intelligence becomes ever more advanced. There's this greater risk at the moment for the technology to be used maliciously, particularly on social media. The rise in deepfakes, manipulated media, it's proven particularly harmful during this election cycle. Now, California-based startup Get Real Labs builds tools to analyze and combat media manipulation. I want to talk about how important the role is right now with Hani Farid for more. And you've basically been building this business alongside academia to try and target what could be a real election risk, but just ongoing risk. Hani, how much do you think that this is currently something we need to be understanding and worrying about in the current context?
Yeah, it's hard to look at the last few years in generative AI and deepfakes and think this is not a risk to us as individuals in terms of fraud, to institutions in terms of fraud, and in terms of democracies in terms of dis and misinformation. We are seeing it here in the U.S. We have seen it in Europe. We are seeing it in India. We are seeing it around the world, that dis and misinformation is being powered now by the latest trends in deepfakes. And what we are trying to do is think really hard about how we can detect and stop that type of threat vector.
Professor Farid, I also want to let our audience know about your role at the University of California, Berkeley, the work you're doing there. But for me, it's a technology story in the sense that you have a new tool to combat an issue. Yeah. And at the same time, the proliferation of applications, generative AI applications that create that content is also on the rise. Yeah. Do you actually just ever phone up some of those companies and say, let's work together.
Yes, in fact, we do. In fact, you can't work in cybersecurity if you're not talking to the other side of the aisle, right? You can't do defense if you don't understand offense. And the good news is, I think that the OpenAIs and the Midjourneys and the Stabilities are not bad actors. I think they're generating technology that has good uses and bad uses. So I think they're generally incentivized to work with us to create defenses. We take all the advantage of the technology and we mitigate some of the risks. And we have to do that together.
If we just took the presidential election as a case study, how would your platform and technology work if there were a video, a deep fake circulating?
Good. So what we want to be able to do is anytime an image, an audio, or a video breaks, and you saw that, in fact, at the shooting.
Which is interesting.
Exactly. And you saw it this weekend at the shooting. There was immediately fake images and fake videos coming out, muddying the landscape. So we work with reporters, we work with fact checkers, we work with organizations, we work with campaigns. As soon as something comes out, you send it to us, we run it through a battery of tests, and we try to find as much information as we can so that you can make decisions downstream.
Talk about that decision that a consumer has right now. Have we all become so numb that, well, we wonder whether anything is real now?
Sure, that's always the fear. So what I like to tell people is what we do at Get Real is necessary but not necessarily sufficient. So the first thing we have to be able to do is tell you what is real and what is fake. There is another battle now that we have to get out of our echo chambers. We have to stop hating the other side of the aisle so much, because if we can't hear facts, I don't know how we move forward as a democracy and as a society.
I just want to know a bit more about Get Real Labs and how you came to be. Incubated over the past couple of years with Ballistic Ventures and UC Berkeley, under yourself, really incubating this business. What does it look like now? How many people, who are you attracting?
Right, it's a great question. So first of all, I started working in this field 25 years ago. So this is, for me, is a long academic journey. And about 2 years ago, I partnered with the folks at Ballistic Ventures. It's Ted Schlein and Roger Thornton. They incubated us. Our head count is 30 right now, and we will quickly be 40 to 50 by the end of the year. We have a product. We are starting to work with customers, and we very much expect to have technology out before the election, per the point you were just making, Ed.
Professor Hani Farid, co-founder of Get Real Labs. Really interesting and timely conversation. Thank you. Caroline.
We're just going to get back to the broader markets right now, Ed, because they're under pressure. We're being hit hard. NASDAQ 2.3% lower, worst day since October. Now, put it into context, we're only trading the lowest since July the 1st. But a more than 2% dip is a big one, and we haven't seen it for a long time. We're being dragged down by the chip makers, off by 4% on the stocks and the chip index more broadly. Why? This concern that we'll see ramped up Biden focus on China accessing chip manufacturing, but also that manufacturing equipment coming from Europe, from over in Asia as well. Nvidia off by more than 5%. For a nearly $3 trillion company, that's a big move. ASML off by an 11% move, even though they had strong earnings. They are really exposed to China. Intel, though, is up 1.8%. An incredibly important Business Week story coming. An interview with former President Trump saying, look, Taiwan, should we be protecting it? We're worried about Taiwan, ultimately helping Intel. We've got a lot coming up, Ed.
Yeah, and to your point you made earlier, many of these indices at their lowest since early July, but they're big drops in the moment. Coming up, we're going to be joined by Menlo Ventures partner Matt Murphy on the firm's exclusive partnership with Anthropic and their new fund. That's next. This is Bloomberg Technology. Menlo Ventures just announced the Anthology Fund, a $100 million initiative created through an exclusive partnership with AI company Anthropic. The goal, to partner with innovative founders to build unique AI-first applications and infrastructure solutions that leverage Anthropic's technology and its AI models. I'm going to bring in Menlo Ventures partner Matt Murphy for more on this. Mechanically, how does it work? So you see something on your desk, an opportunity, and you phone up somebody at Anthropic and say, we should do a deal here. We should co-invest, and we can help.
Well, it's a little deeper than that. It's really a collaborative initiative with them where we've got a whole program built for entrepreneurs. So we've got quarterly meetings, we've got biannual demo days, we've got a lot of back and forth interaction between the two companies. And really, we expect a tremendous amount of the deal flow to come from them, things that they're interested in, that they see, that they'd like to see kind of as lighthouse examples of of AI. So there's a lot of alignment around basically kind of this first wave of AI has happened so quickly and been the biggest kind of technology wave and curve we've ever seen, but it's still a bit of the Wild West, and developers are on their own, and everybody's doing things a little bit differently and trying to figure it out. There's an immature ecosystem. So the idea here is to really bring together the best developers, the best AI technology platform in Anthropic and a leading venture firm like Menlo to really build community and push the boundaries together, to learn together, to mature that ecosystem, and to really think about some special areas that really haven't been conquered yet. So super excited about it.
I mean, Matt, this isn't kind of the first time you've done one of these innovative kind of partnerships. I think back of the iFund that you helped launch back in 2008, that was about being collaborative with Apple, defining apps, applications on their operating system. Can you tell us a little bit about how much skin in the game ultimately Anthropic will have? Or is it more about just bringing about Claude, the adoption of it, and, well, then perhaps funding a bit of use of their own applications?
Yeah, well, it's Menlo's capital, but it's really Anthropic's sponsorship, advice, mentoring, getting closer to these developers. So I think it's really a win-win for everybody. Anthropic has a cohort of developers that, A, they will have recommended a number of them, but B, they'll really be kind of involved in helping them. If those developers are stuck, they'll be able to understand what kind of needs developers have, and and kind of really make sure that we've got very specific areas that we're both interested in seeing applications exist, that we kind of help fund those. And I think for entrepreneurs, again, given it's a bit of the Wild West, they now kind of know there's a place to come where you can get support from Anthropic. Every developer developing something should be looking at Anthropic because it's absolutely the best model right now, and we have great confidence that it's also the best team, and will continue to kind of pace that race. So Anthropic's really trying to get closer to the developer community. That's what we do on a daily basis, and developers can really take advantage of it.
Matt, support or compute? There's a lot of discussion right now about venture firms who are, kind of advertising that they've built up their own cluster of H100s. I think Andreessen's an example of that, right? But in reality, it's probably through AWS. Anthropic has a great relationship with AWS, GCP as well. You kind of market it that way, where you say to potential portfolio companies, this is the support operationally we can give you through a compute lens.
Yeah, I mean, I think this is more about creating a community of founders that can learn from each other and talk to each other about how they're solving certain problems, get advice from Anthropic on their roadmap, early access to certain things, and really just kind of more of almost like a bat phone or a hotline to talk to them if they've got any issues. So I think the whole notion of building out, a cluster and capability of capacity for them is not really part of this program, nor do I think it's necessary. I mean, they get free credits and things like that, so there will be capacity on Anthropic. But I was actually with Jensen last night, and I have high confidence that NVIDIA will continue to solve the capacity problem, and the big cloud providers like Anthropic's partners, AWS and Google, will provide that need over the time. So we might have a little bit of a short-term capacity constraint, but I'm not too worried about it over the long haul.
Matt, I'm a founder wanting to get more use out of Anthropic, and I've got an idea. What problem do you want to see solved? Because there are lots of areas that allocation and, well, value can be attributed to in the supply chain right now of AI.
Yeah, I mean, I think there's certain areas that, we've called out that's big interest for Anthropic too, around things like digital health. We know how messed up that system is, and all the capabilities to automate, do better diagnosis, accelerate cure programs, things like that. The legal vertical has already been one of the first movers here. I think helping people optimize trust and safety, because trust and safety can be a real barrier to adoption if people feel like the models will hallucinate or produce results that aren't consistent with their brand message. I think there's a lot of infrastructure. The model is one part of it, but really for any developer ecosystem to thrive, you need a whole developer experience. So there's a bunch of things like that we'll be working on together that will be really exciting.
Matt, the top story this week on our show has been JD Vance, probably. You were quoted in a Bloomberg story weighing in as part of a very broad Silicon Valley reaction. I just wondered if you'd extrapolate a bit more and explain your view on a former Silicon Valley name potentially going to the White House in November.
Yeah, my real point was irrespective of party. I think the more that we have people in the White House or around Washington who really understand tech, it's the biggest driver of innovation and job growth in our economy. And we need people who understand it. And having somebody who's been as part of a fund, who's seen the way innovation works, backed companies, been on a board, things like that. I think it's kind of a unique experience and opportunity that can be helpful. You know, we have some resistance right now around the M&A market and antitrust that's been blocking some important deals. And the way that the venture economy can really flourish is where strategic buyers can purchase the companies that may not be able to get all the way to the IPO on their own. We have other exit paths like PE firms and things like that. But really, and obviously IPOs, but it's super important that there's a vibrant M&A environment. And I think anyone who's leading in Washington should be very conscious of that to enhance and continue this job growth. It's been an amazing growth engine for the country.
Matt, thanks for coming on, talking Anthology Fund and a little bit of politics of Menlo Ventures. We appreciate it. Now, let's just wrap up what was in European trading a big day for ASML to the downside. Worst drop since March 2020. The chip equipment maker seeing the prospect of more severe US restrictions on its business in China. This is Bloomberg Technology. The good, the bad, and the ugly. That could be one way of summarizing the last 24 hours over at Amazon, because Prime Day is getting off to a fast start. Sales jumping, look, 13% within the first 6 hours of the event yesterday. But you fast forward to Tuesday night, the company's advertising portal, it crashes, leaving brands in the dark, flying blind with their ad spending for more than 2 hours. Felt a bit of a sour ending to the first day of Prime Day, certainly weighing on the shares this morning. Look, let's bring in Spencer Soper, who has the inside track. You watched as people were left baffled and frustrated, I'm sure.
Yeah, there was a lot of panic last evening, and we started working on the story when there were signs of trouble. And right about the time we got the story out that Amazon's advertising portal was down, this is kind of a critical tool that people who sell things on Amazon and manage brands on Amazon use to manage their ad spending, look for which keywords are hot so they can adjust their marketing spend accordingly. It just went dark for a lot of these sellers. And so, yeah, we were reporting into that last evening and confirmed it with Amazon. But it did seem to be short-lived, which is good. That's the trouble with these glitches. You don't know when they're going to just keep spiraling out of control and when they're going to be contained. And this one does seem like it was contained without a crazy amount of damage.
That's kind of the bad and the ugly. I guess the good, Spencer, or one way to look at it is it's kind of like money left on the table for Amazon, because it seems like growth for Prime Day. It was a good showcase for the e-commerce platform.
Yeah, all other indicators of the Prime Day is doing fine. And even the glitch doesn't necessarily hurt Amazon. It more hurts people who sell on Amazon, who are monitoring in real time and wanted to make adjustments. They kind of got hamstrung for a bit there. But a lot of the ad spend and stuff is automated, so they just weren't able to make changes. So yeah, Amazon is Prime Day so far doing quite well, tracking at about 11% growth from the same event last year, and that's Adobe's prediction, and that's everything seems to be on track with that estimate. And another thing is that Prime Day, you really see a surge in the initial hours, like that first day, the morning of that first day when all of the spending occurs. So it was fortunate that the advertising glitch came in the evening on the first day, because the spending, consumers aren't quite as busy on Amazon Prime Day at that time.
Spencer, we appreciate it. All things Amazon Prime Day. Thank you, Spencer Soper. Look, let's just check in on this market again, Ed. Extraordinary day. Chip stocks down. ASML having its worst day since March 2020. Its earnings were good, Ed, but not good enough to offset the geopolitical risks.
Yeah, vast majority of names on NASDAQ 100 in the red, but the chip stocks were the pains are most felt.
That does it for this edition of Bloomberg Technology.
Check out the pod. You know where to find it. This is Bloomberg.